Good morning, everyone. This is Andy Montgomery from HDCS. We're doing a reboot or a replay of a webinar we did at the end of July, where we had over 20 bankers from across the country join us in the webinar to learn about pricing and how to make your cannabis banking a profit center, or how to deal with cannabis in general. I want to introduce who we are. HDCS is a consulting firm that aggregates resources for banks to be able to address higher risk depositors. So we do things including vetting, monitoring, keeping up as a subject matter expert on all laws and regulations, reporting for banks to make the cannabis banking or high risk deposit framework less costly and more cost efficient. My name is Andy Montgomery. As I mentioned, I'm a long-term banker, 25 years in the banking industry, which includes starting a couple banks as a CEO and building them from the ground up. And when you do that, you have a lot of policy and procedure and dealing with regulators directly experience. And I've worked at Money Center and large banks along the way too, or regional banks along the way too. I'm joined in presentation with Pat Nicholson, who's a former Apple executive and a veteran of a couple of fintech companies. And Becky Poster's also on the call, and she's our policy procedure law expert. She's tracking a number of laws and regulations around the country. And can answer any of those along the way if you have questions. Also part of our team is Chris Ganayas, who has built out AML BSA programs for Western Union banks and large money remitter, and Todd Lee, who's a financial advisor to us. So when you look at successful cannabis banking program, you're going to have to balance profit and risk. We know that. And there are a variety of different approaches that are out there in terms of cannabis banking. Some are geared to create a lot of income off the backs of the cannabis companies, and some will not be sustainable as we go into a more competitive solution. It's got to make sense ultimately from the cannabis company and the bank. On the other hand, you'll see that we think some of the pricing programs out there are a little light, as bankers are going to have to deal with increased regulatory apparatus surrounding cannabis banking. And we believe that not just the banks that want to openly bank cannabis are going to have to deal with cannabis banks, cannabis AML, BSA issues, but all banks that are in states where cannabis is legal are going to have to beef up their efforts to either prevent it or manage it in their programs. So just going through the agenda real quickly, and I know you're all dealing with a lot as we deal with the uncertainty of COVID. So we're going to stay right on an hour today and be respectful of your time. And that'll include a question and answer period at the end. We will ask you to fill out a survey if you could, just to give us advice or feedback, anything we can add for future webinars. We're going to continue to add webinars that we hope will be informative regarding cannabis banking as we go forward. But we're going to start with an overview of the cannabis industry. We'll do an update on all laws and regulations and go through what we think a comprehensive cannabis program needs to look like, and then how to do it safely and profitably. And again, we'll have a question and answer period at the end and be done in under 1 hour. That's our commitment to you. So why don't you take it forward, Pat?
Great. Good morning, everybody. So I want to give a brief overview of the cannabis industry. You may have some of this knowledge, but not all of it. And I think these are probably some of the most important things to understand up front as you entertain the opportunity here. So first thing we're going to do is look at what different types of CRBs there are. And CRB stands for cannabis related business. And here we have the full sweep of the supply chain, starting on the left with producers. So these are the farmers that grow or cultivate the actual plant. They typically send that plant material through to a processor. right? Which the processor will take that plant material and extract compounds like THC and CBD. They also manufacture products like edibles that will then go into the marketplace. And the marketplace and distribution in the case of marijuana is dispensaries, right? So you have dispensaries that sell the products, and there's a lot of connective tissue and different types of businesses that exist in between these mainstays. So you have at every step of the way, you have transportation and security. And when producers send plants through to processors, they first have to, send samples through a lab, right, to test the plants to see how much THC they have, for example. And then when the processors send products through to retail, they have to send the products through labs as well. So the thing that binds all of those different types of companies together into what is called Tier 1 is that in some way, shape, or form, they touch the plant or the byproduct of the plant. And so, Tier 1 is often thought of as the entire cannabis industry. But when you look at the existing regulations, there's actually two more tiers. So in Tier 2, we have businesses that primarily serve Tier 1 CRBs, right? So they're a primary clientele and primary source of revenue. So examples here might include like a hydroponics company or a lighting company that sells to a grower. It would include the packaging companies that provide packaging for the products that processors send through to dispensaries. And really importantly, it includes seed-to-sale software providers. And we're going to be talking a lot about seed-to-sale. I won't say everything right now. But every licensed Tier 1 business has to use a seed-to-sale system or what's called a track and trace system. And it's really important to understand that those systems look at the full supply chain from growing, from seed through to plant, through processing, through to end product, through to the sale and the receipt to an end customer at a dispensary. And why this is so important for our conversation today is that this provides a money trail, right? So there's already an audit trail that exists for all the transactions that occur throughout the supply chain. And that provides a basis for cannabis banking. Finally, we have Tier 3 businesses. So these are businesses that may have some clients that are Tier 1 CRBs, but that's not their primary clientele nor their primary source of revenue. So this list is too long to put on a slide, but common examples include lawyers, accountants, payroll services, property owners, and the list goes on and on. So the really important thing to understand is that Tier 1 cannabis-related businesses already live in a culture of compliance. So there are a lot of regulations that they have to adhere to and hurdles they have to clear in order to become licensed, to have, basically to be zoned to operate. They have to go through background checks. When they're in operation, there's a lot of protocol they have to follow around training, transportation, security, sales limits, hours of operation. And on the product side, there's a lot of regulation that's akin to like FDA regulation around the testing of products, the labeling requirements for packaging. And then we've talked a little bit about seed to sale. And seed to sale is really critical even in the current environment where there aren't a lot of secure banking relationships available, because state regulators are one of the primary customers for the seed to sale systems. And the reason that they track the money is because they want to collect the taxes, right? And so that same system and reporting can be used for banking and for anti-money laundering. So let's talk about where marijuana is available for sale in the US. And a lot of people don't realize how pervasive this already is. So basically, marijuana is legal for sale in 32 states plus the District of Columbia. 22 states have legalized medical marijuana, so you have to actually have a card in order to go into a dispensary and purchase. And 11 states have legalized medical and recreational. And we're already at the point where we've crossed the Rubicon, so to speak, both culturally and in terms of sheer demographics. So in a Pew Research study conducted last November, they found that 66% of American adults support legalized adult use in their state, right? So cultural acceptance is there. Maybe not amongst everyone, but amongst a clear majority. And if you look at the population, the adult population in the states where marijuana sales are legal, 68% of US adults already have access to legal marijuana. So, we think that this is long past kind of a pilot phase, and it's really a market that's emerging and will mature. Now, we're in an election year, as we all know, and marijuana is going to be on the ballot in several states. So states on this map that have yellow lines are states that are considering legalizing medical marijuana for the first time. And states with the green lines are states where they already have legal medical sales, but they're entertaining adult use, and that's going to be put to the vote. So we see this expanding. And even though it's, COVID is impacting everything, it's certainly impacting ballot measures. We'll have to see where this all lands. But we do expect more states to be in this business and this to continue growing. So I'm going to leave you with the size of this industry. All right, so this is a big industry already. In 2019, legal tier 1 marijuana sales topped 14 billion, right? So that's already a sizable industry. But it's really important to note that that doesn't include tier 1 or tier 2 revenues, which really aren't being tracked, right? So, and it doesn't include the black market and gray market sales, right? So without a secure banking solution, the black market outweighs the legal market in many of the top states like California, Colorado. A lot has been written about this. And the reason why is because it's easy to avoid taxation, right? So it's not necessarily that someone's selling it out of the back of their van. The way to think about it is there are a lot of businesses that are partially legal that follow all regulations first and pay taxes on some of their sales. But then they also have a large gray market where they increase their margins by not following all the regulations, right? So that's a big reason why we need safe banking, right? And as we look forward over the next 5 to 6 years, the projections are that just the tier 1 legal sales are going to they're going to come in around 45 billion. And we think this number is very conservative because a lot can happen with legalization at the state level. A lot can happen with consumer consumption behavior over this time frame. But most importantly is we anticipate that there's going to be some movement on the federal side, maybe not to legalize marijuana, but around safe banking, which we're going to talk about next. And once secure banking relationships are available, it's really going to drive a lot of that illegal trade through the banking system, and it will have to become legal and regulated, and then these numbers are going to climb. So the legal sales are going to climb when banking is available. So with that, I'm going to pass it back to Andy to give an update on the laws and regulations.
Yeah, thanks, Pat. Hey, good. There's a good summary of the impact of the illegal trade for any of you that watched 60 Minutes. Last Sunday, 60 Minutes re-aired a good segment on the California market and what's happening with illegal and legal trade. And when Pat means drive the illegal trade from the banking business, because a lot of that illegal trade is already in the banking business and it's stifling the legal trade. So we think that there's tremendous upside in the legal compliant cannabis, which is all we want to bank in terms of growth and revenues. And so we just hit the beginning of that stage, and that's why safe banking is such a big, important part of that. But there's a fluid legal landscape there to follow cannabis legislation. There's 33 different state laws. Inside of those, 12,000 municipalities, which each have their own laws governing cannabis. There's a rescinded call memo, which is really the legal structure from a federal standpoint, which is not really rescinded any longer, and there's FDA and USDA guidance. In the banking world, we've got FinCEN guidance. We've got some state banking guidance. Probably the most robust out there is the Department of Business Oversight in California, which is the state banking regulator. There has produced some good guidance. And then there's just best practices. We're still waiting for federal regulatory 50 Act to write the rules because they need a mandate from Congress, and that is safe banking, which has passed the House. and still in the Senate. And when that will pass, we're not exactly sure. It was in the House's last stimulus bill, which we know is dead on arrival in the Senate. We don't know if that'll survive in the Senate bill. So far, it's not. But at some point, we're going to have safe banking, and it will could mean just the political winds changing. If Congress changes hands, the Senate changes hands next year, and if you follow the polls, it's not unlikely. Then we could have safe banking as soon as next year. It will certainly be one of the first bills passed in the Senate if that occurs. So the Department of Business Oversight guidelines I think, are really helpful and a place to start in terms of defining what the regulatory apparatus is around banking. I'm not going to go through all of that. We've developed a lot of our plans and guidance surrounding this, and then anticipating what the federal regulation is going to look like. For those of you paying attention, Jelena McWilliams, chairwoman of the FDIC, has said in all of her recent speeches that banks that follow the existing guidance out there, meaning FinCEN, the Cole Memo priorities, and what are probably commonly known as best practices, should not have a problem with federal regulators. And that's what we've been seeing. Again, we talked about safe banking. It's inevitable. Again, it's passed the House by a wide margin. Pat went through all the statistics. I think what's notable is the FDIC, OCC, Treasury, and Attorney General all want a legal banking solution. So do the 34 state attorney generals. And for Pat kind of talked about the reason, because if you have banks that start vetting the illegal from the legal, it takes some of the burden off the law enforcement, and they don't have the resources to enforce the legal from the illegal. And I think that, again, the 60 Minutes piece does a good job of showing that. So if you can isolate those that need to trade in cash from those that can have a banking relationship, that means law enforcement could more easily do their job, and states can collect the taxes more easily that they need to. It's just simply safer inside the banking industry than outside. And when I say it, I mean legal and compliant cannabis only. So we're going to run through briefly how we think, what we think a safe cannabis program needs to have, and then we'll get to pricing structure and profitability. Understanding the risks. There've been no enforcement actions on banks specifically for banking cannabis. State banking regulators have shown an interest in the cannabis banking program. So have federal regulators, but they have not commented on the cannabis programs. So the state banking will provide guidance, an assessment of a cannabis banking program, and the federal regulators, in our experience, will just tell the bank to comply with existing regulation out there. And that's because they don't have any rules to enforce at this stage. So there's not much that federal regulators can do. They're collecting data, though, and information. And they're sending a lot of regulators out to banks just to observe at this point so they can get ready. What you need to think about with your cannabis banking program is to have it flexible enough to adapt to federal regulations when they are written. So don't do an overkill in providing a solution that may not be required. And we suggest don't do it in an ad hoc basis. We believe that all banks are going to have to, that are in cannabis states, are going to have to address cannabis in one way, shape, or form, because the illegal trade is banking somewhere. And it's not just enough for a bank to say, well, we don't bank cannabis. They've got to be sure, if their risk statements say that, or risk appetite says that, they're actually not doing that. So that's part of the issue, is really understanding what's in your existing portfolio and making sure you have the appropriate preventative measures in place. The risk with cannabis is the same what that you're dealing with in your institutions all the time. Where cannabis really accelerates the risks, obviously, are with anti-money laundering and bank secrecy, and the fact that there is illegal trade right next to legal trade, and it's very difficult to distinguish the two. And that illegal trade may not be as nefarious as you think. It may just not be complying with a local law or ordinance, and yet they're still illegal and non-compliant. And from your standpoint as a bank, you need to make sure that you're vetting the cannabis-related companies, not just for the laws that exist today, but the laws as they change, and monitoring their compliance with it. And so that's where the additional risk around cannabis really comes into play. We recommend that every bank develop, if they are going to have a sizable cannabis deposit program, they develop a contingency plan for liquidity in case they have to exit the business for any reason. We think it's all about best practices. The banks that regulators have never asked banks to make sure that no money laundering goes through the banking system. That's not what the requirement is, because we know in some way, shape, or form, and you can look at your SARs in each of your branches, that there's some form of money laundering going on in branches around the country every single day. What regulators want are banks with a system of control, monitoring, oversight, policies and procedures, documentation to reasonably detect and thwart any attempts at money laundering. So they want a system of best practices that you can identify it and you can take appropriate action to avoid money laundering going through your institutions. We think you start with, in a cannabis banking program, with a solid foundation, and considerations around that are having a good BSA AML program, making sure any deficiencies are shored up in that program. As part of starting a cannabis banking program, you need to update all your policies and procedures to reflect this area of risk, do a thorough risk assessment, integrated into your enterprise risk management program. That'll help you define the resource requirements your particular institution is going to need, who's going to be in charge of it, what sort of subject matter expertise are you going to have, not just now, but in the future as laws change and people change. You're going to need to keep that cannabis specific subject matter expertise on hand, either inside your institution or have an outsourced consultant to be able to do that. And so you'll be making a determination on how much of this you want to insource or outsource, what technology you need to employ. Not every bank needs to employ technology. We've encountered just as many banks around the country that are not using any specific technology to cannabis, but have figured out how to use their existing BSA programs and core systems to be able to detect and monitor deposits. Cash management is a consideration here. This is an all cash business at this point for the most part. How are you going to take that cash? We recommend not taking it into your branches and segmenting it outside of retail so you can monitor it, segregate the deposits, and have BSA oversight all the way through, and visibility into the program and reporting and empowerment functions up to the board. We talked about a liquidity contingency plan. Training your team's critical. This is not just everyday MSB business or more risky depositors. This, again, because of the illegal component, it requires line employees, line management, all the way up to executive management and board having some specific cannabis banking training. Even if you're not going to take cannabis, just to understand what your risks are. Screening the cannabis-related businesses are critical. You need to understand who the right ones, how you understand if they're legal or not legal. We can help clients engage the right ones, do a licensing review, background checks, determination of beneficial owners. So this is critical, the owners and the operators. You want to make sure you're not inadvertently banking El Chapo And so determining who owns some of these businesses is critical, that you're not getting into a criminal background. You need to do a comprehensive audit of the cannabis business on a regular basis. Make sure they're following all the reporting requirements, that their deposits match up to their cash, that there's no anomaly, and then they're following the cash management procedures that you need them to follow. So that requires even training the cannabis-related businesses management staff to be compliant. Some of them are going to have to learn a compliant behavior in terms of the banking world. And there's part of this issue about legacy cash and what you do with that. And that's a consideration that every bank will need to go through. And that's cash that has not gone through the banking system and has not been sourced all the way through a track and trace program. Ongoing monitoring, SAR, CRT process, understand if there are anomalies, making sure you're reporting those according to the FinCEN guidance and any future guidance that comes. Leaving the regulators a copious record of what you've done in terms of investigating anomalies. So when they come in, either internal audit or independent audit or regulators, if they've got a copious track record of how you've made determinations on cannabis businesses, how you've acted when there's been anomalies, how you've investigated it, to make sure that you show them that you're on top of those system of controls with these businesses, we think is critical. We think there should be a monthly review of each cannabis-related business, and we're not talking about an on-site visit, but we're talking about a check-in just to go through programs. There needs to be quarterly management for reporting for the board and executive management on the program. Any anomalies going on in the program, so there's visibility from the board, executive management, all the way down through the line. And that includes periodic exams of at least yearly of the cannabis-related businesses. We've developed a digital portal that's sort of the soup to nuts for what we think a comprehensive cannabis banking program should look like. We'll be happy to take you through, or any of your team members through that anytime, to show what that looks like. But it starts with policies and procedures and risk assessment. We update laws, federal, state, and local laws on an ongoing basis. I think Becky is tracking something like 1,400 separate laws around the country right now. But we maintain that subject matter expertise for banks. We've got a cannabis lending policy. There are obviously considerations with lending to the cannabis business. We do a risk readiness assessment for each bank, and an audit. We have a cannabis audit program. We've got a framework for screening the CRBs, marketing to them, the pre-banking and vetting audit, and training for management and the staff. And then ongoing monitoring support. So all of this guidance and all of this documentation can be interweaved into our bank clients' existing document framework, policies and procedures framework. It's designed to save people going into the cannabis business a lot of time in developing the program. We also have developed a list of comprehensive list of reports that can be customized to banks for line management, executive management, and board, either on the macro level or drill down to each micro cannabis company. So on a mobile device, you can have a pretty good idea of what's happening on a daily, monthly, quarterly basis with your cannabis banking program, and actually each individual cannabis-related business. So just to sum up, what we think the right solution is to put the right foundation in up front. Don't do it on an ad hoc basis. Have a system of screening and monitoring so you can demonstrate to the regulators that you've input the appropriate controls in place. It's more than just a technology. Just having a technology, we don't believe, will satisfy regulators in the end of the day. And if the technology gives away too much to the third-party provider or gouges the cannabis-related business, you might want to rethink that, because we don't think that's sustainable, and do more open banking solutions. So how to bank cannabis profitably.
Yeah. Thanks, Andy. I'll take it from here. So as Andy has laid out, there's a lot of considerations and a lot of elements to a comprehensive cannabis banking program. And to do it safely is going to involve significant effort. It's going to require resources and investment on your part. So this next part of the presentation is largely focused on how to appropriately price the program, not only so that you can cover the costs that are associated with establishing and managing the program, but so that it's profitable for your financial institution, because you wouldn't want to go through a heavy lift like this unless it was going to be accretive to your bank or your credit union. So the first question we ask financial institutions that we speak with across the country, and some that we're actively advising, is why do you want to do this? So before we get into the what and how, it's important to understand why. And so we find a lot of answers out there as we talk to bankers. Some and many actually are looking to add an additional profit center to their financial institution. Some look at it through the lens of adding non-interest income. Some look at it more from the standpoint of just an opportunity to widen the spread on their lending portfolio. And the great news is cannabis banking can check all these boxes. We encounter a lot of bankers, and this is becoming more and more common, that their why is that they need to be responsive to their community. You know, they may have a long-term ag customer that has added cannabis to their ag portfolio. In many cases, you know, we hear anecdotes about board members that have friends or family members that have gotten into the cannabis business and are looking for a banking solution. So, you know, we do find a lot of need within these individual communities and pressures from that side. And then we encounter some bankers that are adamant, you know, they've decided they don't want to bank cannabis now or in the future, but they want to make sure that they're not already doing it, right? That it's not already in the bank passively. So we work with, you know, bankers across the spectrum, but I think it's really important for you to ask your why. And if you do go forward with the cannabis banking program, I think the most important place to start is that, you know, in the profitability equation, you want to control your costs. And one of the most effective tools is enhanced due diligence, right? And this goes back to only letting the right cannabis related businesses into your system. So, you know, being very diligent up front in screening and vetting the CRBs is not only the key to limiting your exposure to risk, but it's also the key to limiting your costs and the churn within your cannabis banking program, right? You don't want to have high turnover because there is quite a bit of upfront cost in enhanced due diligence and onboarding. So when it comes to cannabis banking, the best offense is really a good defense. So you also have to think about how you're going to price the program. And here are some key considerations I just want to leave you with before we get into some of the pricing options. You know, the most important thing is to recognize that banking cannabis involves additional risk. You're going to need to invest in the right apparatus of controls, subject matter expertise, and people and/or outsourced vendors, right? So you need to get paid for the risk, the additional resources, not only to cover your costs, but to turn a profit. And the good news is that cannabis-related businesses are willing to pay for depository services, right? And over time, I think there's going to be a great cross-sell opportunity into these businesses. But just up front, you know, it's a little bit foreign to us in the US, but, you know, these business customers are willing to pay just to have their deposits in your bank. But as you price that, you need to really focus on sustainability, both for the CRBs and for your financial institution. And we're going to get specific about that point. So what are the things you can charge for? The advice we give to the financial institutions we work with and advise is that it starts with charging for due diligence. By charging for due diligence, it ensures a couple of things. First, that you have a robust and rigorous process on the bank side. And that the CRBs understand that they are going to have their ducks in a row initially, and they're going to have to remain compliant over time. So by charging the CRB for the due diligence, you ensure that only the ones that are serious about compliance now and staying committed to compliance are going to be willing to pay that, right? So we think that's a great control to have at the onset of your business relationship with the CRB. In the middle, we have monthly fees. And monthly fees feature in just about every cannabis banking program we see out in market now. And we think that it's a good part of a pricing model, but it's not sufficient on its own. And I'm going to talk a little bit about that on the next slide. But the key that, in our view, is for your pricing model to charge a reasonable percent or basis points off of the deposits, right? And as I mentioned just a moment ago, this can be a little bit foreign to us because typically we provide incentives to commercial customers to put their deposits in our financial institution. But with cannabis-related businesses, they're willing to pay for depository services, and we think it's the key for scaling your profit as your program matures and you reach critical mass with your deposit portfolio. So I want to dive a little bit deeper into what we actually see in market, right? So this kind of covers two ends of the spectrum. On the left, we see a lot of active programs where a bank only charges a monthly fee. And you know what we've seen generally ranges between $1,000 and $2,500 a month for a depository account. And you know the reality is that some of these banks are doing well with this today. And it's because we're not living in a highly regulated environment right now. You know, the federal regulations aren't written, and state regulators are generally in favor of cannabis banking because it gives them more control on law enforcement and tax collection, right? So, but we believe that when safe banking passes, which is a matter of time, and the regs get written and deployed, that this isn't going to be enough to cover costs, much less turn a profit, right? So it can be a good part of the solution, but we don't recommend it being your entire pricing solution. On the other end of the spectrum, we see banks that, you know, primarily those that are working with a technology vendor that are charging a percent of each deposit transaction, right? So this isn't really just, you know, basis points in the traditional sense. It's like each time money goes into the bank, there's a percentage pulled back. And a lot of that goes to the software vendor. And if you do the math on a spreadsheet, it really amounts to factoring deposits. And it can climb as high as like 300 to 400 basis points annually for those cannabis businesses. And while there are some willing to pay that today in a environment where there's not a lot of secure banking relationships available to a CRB, once the law passes and regs are written, it's going to be a more open marketplace. So you wouldn't want to be in a position where you spent time building up critical mass and deposits and building up these customer relationships to have those people leave you for a lower price point. So it's really about finding a place in the middle here. And what we recommend to our clients is that you target, adding an additional 100 basis points of spread. And we think this can be done. And the additional 100 basis points is net of the expenses of establishing and managing your program. So in this example, we've got a fictional bank that has $1 billion in existing deposits, and we have two columns. One that represents what it might look like for them just to get started and maybe run a pilot program. And then on the right, what the potential of the program could be. So on the left, a bank that maybe wanted to pilot a cannabis banking program, let's say that they had 1% of their deposits in cannabis. They had an existing yield of 4.5%, and they were able to add 100 basis points to that. For their pilot program, that could be accretive in the range of $550,000. So it's material, right? But the investment they make there really has much more potential, because when the regs are written, we believe that there will be concentration limits on cannabis deposits. And the opinions out there currently range from 10 to 20%. So even if we take the low end of that range, we're talking about 5.5% spread on a base of $100 million. That yields 5.5 million to a $1 billion bank, and that's what we mean when we talk about reaching critical mass and about establishing a new profit center for your financial institution. So I want to give you an example of an early mover. Partners Federal Credit Union here in Colorado, where I live, they've had a cannabis banking program for 5 years now. And it's also important to note that adult use and medical marijuana sales have been legal in Colorado for 8 years. But for the last 5 years, they've been able to build this program up to critical mass, $224 million in deposits. So this is a nonprofit that's generating quite a profit. And they're already like one of the first financial institutions to move forward with a lending program for cannabis clients. So they're getting additional cross-sell opportunities. And the most important thing to note about Partners is they've scaled up to 224 million in deposits, and they haven't used any technology that's unique to cannabis. So they've been able to, develop processes, use existing technology, and build an efficient workflow to scale to this level. This chart shows what we think a successful cannabis banking program looks like over time, right? So the yellow area is expenses. The green represents revenues. And you can see if you start over in year one, that expenses and revenue are going to be more in line. But the key point here is that we think that the market will bear profitability in the first year, right? And more importantly, over time, you'll notice that the expenses stay relatively flat, whereas as deposits scale, so do revenues and so does profitability, right? So this can become a hugely profitable profit center for a financial institution. So the question we always get and entertain on a daily basis is where to start. And we see quite a range, and we're working with customers across a pretty wide spectrum. On the left, we encounter bankers that just want to play prevent. And we advise them on how to screen their existing deposits and put a system in place to monitor, detect, and exit cannabis deposits, right? It's better to do that proactively than to have it come up in an AML BSA review. And so we're seeing more and more banks, take action in that area. And then in the middle, we find many banks that either want to get ready or they want to do a proof of concept. So, we can help, lay that foundation and get you ready and without you needing to pull the trigger. There are some financial institutions that want to start with hemp, which is legal due to the 2018 Farm Bill, but it still requires unique enhanced due diligence and monitoring. And then some banks want to start with the indirect businesses, so the tier 2 and tier 3. And by the time you do that, you really need to have the intent to go into tier 1, we believe, because you pretty much have to put a full system of control, subject matter expertise, and ongoing monitoring into place. So most people that take this first step have designs on going to tier 1. No matter where you fall on that spectrum, cannabis banking is going to require you to take action. It is going to require, thought and resources with your documentation. Technology has question marks on it. We think technology is very useful. It's just not sufficient on its own. Ongoing subject matter expertise, that's something that needs to be developed, particularly if you are going to establish a cannabis banking program. It's not just getting up to speed now, it's staying up to speed. And it's going to take skilled people, whether those people already exist within your institution, whether they're new hires, or whether it's an outsourced vendor. And, that's one of the things that, we do for multiple banks is we're focused on that subject matter expertise every day, staying up to speed. So it's more efficient for us to stay up to speed for multiple banks than for each bank to do it on their own, for example. So I'm going to leave you with a couple of thoughts around outsourcing and kind of give you a scorecard, if you will, if you do entertain vendors in this space. First we'll start with the benefits. So the main benefit to outsourcing is speed to market, right? There's a lot involved in establishing a program. There's not a lot involved in doing it in an ad hoc basis. but we think that's risky, right? So really putting together a thoughtful, complete program. You can leverage the subject matter expertise of a vendor. You can also leverage skilled advisory and hands-on support in establishing and managing the program. And it all adds up to fewer dedicated headcount within your institution. And I'd say that probably the most important thing you should do as a measuring stick for any vendor proposal is that, you know, a good vendor and a good solution should pay for itself, right? And so, you know, whether you're talking to us or another vendor, I think you should hold us hold us to that measure. And here are a few things that you would want to ask and avoid in selecting a vendor for cannabis banking. So the first question should be, are they bankers? You know, have they ever operated in a highly regulated environment? You know, have they sat across the table during a regulatory exam? What you want to avoid is taking regulatory advice from an entrepreneur or a salesperson. It's not, you know, they might be well-intentioned, but they're likely ill-informed, right? If they're not a banker. Does the vendor offer a technology or a set of tools or a comprehensive solution? Is another question you should ask. You know, we think technology can be helpful. It's just, we haven't seen a case where it's sufficient. And in some cases, it's not necessary. It's overkill. Another question is to really be thoughtful about your pricing model, making sure that it's both sustainable for your financial institution and for the cannabis businesses. When regulations are written and deployed to the market at the federal level, you know, price gouging isn't going to survive an open marketplace. And you also don't want to be on the other side of that equation where you've been charging too little, and then it's very hard to raise your prices, right, after you've established those relationships. And probably most important is, can the vendor be successful if my financial institution isn't, right? So if a vendor is only selling you policies and procedures or a technology, and then they're able to step away with the check, you know, they can be successful even if you're ultimately not successful with your program. So, you know, what we do, and, you know, we'd be happy to talk with you more about this, not to do any kind of hard sell here, but we are bankers. We've developed a solution that is comprehensive, that really solves for risk first and then profitability. And we put a lot of thought and spend a lot of time with our clients around their pricing model, so that they can pick something that's profitable and sustainable. And our pricing model, you know, we can only be successful if our clients are successful, right? You know, and so whether it's us or someone else, we really think that these questions are important to ask. So with that, I'm going to turn it back over to Andy to give some top takeaways, and we can go into Q&A.
Yeah, I think that as an early mover into the space, if you price it right and you don't discourage deposits or depositors to build critical mass, the other thing you're going to have is very loyal and sticky customers. And so that's a consideration. I think the cannabis business, those that are legal and compliant, are hungry for just stable banking relationships. And so when you get to a point where you can cross-sell multiple products into the space, they're going to be listening. If you're in a state in which recreational cannabis is legal, then you're probably banking cannabis in some way. The illegal trade is in the banking system. It may be disguised in the banking system. It may be temporarily in one bank and moving to another bank, but it's in the banking system. We know that for a fact. Also, the rules and regulations have not yet been written around cannabis. So it's not that we're late, it's we're early. Until the federal regulatory rules are written, nothing is for sure. And so people that claim to have a lot of expertise in this space, it's a young industry, and we're going to see a lot of changes to it over the next few years. You do need a comprehensive banking program to address cannabis, not just the technology. Don't do it on an ad hoc basis, because when you do have federal regulatory oversight, you're going to need to make sure that you understand the difference between legal and illegal customers, and you can identify those. But it is profitable. This is a profit center. And given COVID and commercial disruption, that may be one you want to consider at this time. Obviously, we looked at those margins earlier. Yields are changing all the time, understand that, but it can be accretive to earnings right away. You need to have board, senior management, and proper BSA in place. So those are the takeaways. Our offer to you is to do a free consultation, to do a free assessment and free plan wherever you are on the cannabis banking spectrum. Why would we do it for free? We're hoping to demonstrate to you that we've got this subject matter expertise. So if you do get into a program, that we can prove to you that we can save you time and money. We only want to be part of profitable solutions, and those solutions that make sense from the bank economically. So we do not want to be an expense, especially at that time. But we're willing to provide an assessment and plan for your individual institution, take it or leave it. And start there. Also happy to walk you or your team members through our virtual data room so they can see what the documentation looks like surrounding a good cannabis banking program.
Great. Well, thanks, Andy. And we do have some questions that have come across the chat thread there. So we'll go through those. We understand that some of you may have to leave at the top of the hour, but we're willing to stick around to answer all questions as long as it takes. So if you have a question now, just enter it into the chat field and we'll make sure to get to it. So first question, and I'll give this one to you, Andy. Are there any states that are really at the forefront or regarded as, kind of providing the blueprint for federal regulations?
Yeah, I think that what the best, in having been in this business 25 years and going through a whole apparatus of regulation from Dodd-Frank, Gramm-Leach-Bliley, you name it. I think California's DBO is the best out there. It is still meager as to what is likely to come, but I still think that's the best place I'd start. It's more comprehensive. Some states have other regulation, but I think California covers most of what's out there from guidance.
Okay, great. I have another question here. If a bank wants to get ready, but isn't ready to activate their program, what should they be focused on now?
I think kind of creating that structure, the foundation, as we talked about, policies, procedures, risk assessment, making sure they've got buy-in from the board. And so if the trigger mechanism for the bank is to wait to safe banking passes, to have everything from an infrastructure ready to go and understand how you're going to attract the right customers. Most banks are not going to want to say cannabis friendly put banners on their branches. So maybe some digital attraction and marketing strategies to get the right type of cannabis companies is important also.
Great. So here's a question, for licensed CRBs, what is a typical deposit balance a bank can expect for, some of the types of businesses we shared, like a dispensary versus a cultivator versus a manufacturer?
It all depends.
In terms of getting to critical mass, I think people are trying to do the back of the envelope math on how many customers they would need to take on.
Yeah, it all depends. I mean, there are banks out there that they will not entertain a balance, a depositor with a minimum balance under $10 million. Most of the retail cannabis world is going to be well under that. So $1 million to $2 million, maybe. It depends on the size of the distributor of the cultivator. So in which state they're in and how mature they are. So it's really difficult to answer that question. We think that you need to be thinking about building a critical mass of deposits. So not just doing it on a one-off basis because it's too expensive to do that correctly, but say we want to target to have a successful program. We want $50 or $100 million in deposits. How do we get that? And how do we do that safely and cost effectively? That's how I would look at it.
Yeah, yeah, good point. I would just add to that that like because it was part of the question that I didn't read to get to 100 million over 5 years. From what we've seen in the marketplace, when you look at the deposit levels for these different types of businesses, you'd be it just depends. Like I mean, there are ways to solve for it with fewer customers, but generally, if you had customers across the supply chain, you'd be looking at between 20 and 50 customers, depending on what your what your limits were for establishing the banking relationship. Another question, I'll take this one because I have the data handy. We've mentioned that there are financial institutions already banking cannabis. How do we know this? Well, we know it because FinCEN publishes data on a quarterly basis about all the financial institutions that are issuing SARs related to marijuana. So there's three classes of SARs. There's a class one, which is a marijuana limited, which means that we believe this transaction is associated with marijuana, but we don't believe anything illegal has happened, at least at the state level. There's marijuana priority SARs, in which case they believe that they've taken a deposit that could have illegal activity associated with it. And then there's marijuana termination, or I'm sorry, there's marijuana termination SARs, which means that we've closed the account. So they publish the data, and the most recent data shows that there's over 500 banks that have issued marijuana limited SARs, and the volume that they're issuing shows that they're processing these on an ongoing basis. And there's almost 150 credit unions, right? So we're at a point where we're over, we're actually over 700 financial institutions. They're primarily in the community financial institution size, either community banks or credit unions. But this number is doubling year over year, and we expect it to continue to grow. There are banks that are moving forward now, and we see quite a range. We see some that have very good programs, and we see others that are probably taking on a lot of risk. But there are a lot of active financial institutions. Let's see. You mentioned that a lot of banks have cannabis deposits in their system, either passively or unknowingly. What should a bank do, or what can they do to monitor and detect cannabis deposits?
Well, I think there's a few different things. I mean, one, I would say poll your branches, because they usually have a pretty good idea of what's there. Train your branches effectively to look for them. But you look for cash anomalies. You look for companies that have cash deposits that normally wouldn't. And we're seeing a lot in like marketing or IT companies that all of a sudden are making these deposits in cash. So your branches will have a good idea. So a good BSA screening mechanism, but training is your best mechanism to make sure it stays out of the bank altogether, and then making sure you can spot that cash and make definitive anomalies in SARs, CTRs, make definitive judgments as you go along.
Great. See, oh, we've got one more here. So if we're interested in seeing what is in those binders you showed in your data room, how can we get access?
Yeah, just you can reach out to me, Andy, or a.montgomery@hdcompliance.com, or go onto our website. And I think there's a connection to ask for information on that regard. Reach out to Pat also, and we'll schedule an appointment and just walk you through going through those binders. Take as much time or as little as you need.
Yeah, we can give you the tour to orient you, and then we can give you some access so you and your team can kind of poke around. And we've it's been helpful to many financial institutions that want to do a gap analysis on either an existing or proposed plan that they have. So we're happy to help on that front. I just want to say we appreciate everyone making time to attend today. We hope that the information was useful to you. And we will be sending some follow-up with some links to some helpful information. And we're here to help when the time is right for you. So we'll send you that email. And with that, we're going to close out right at the hour mark. Thanks, everybody.